What's going on, everybody? It's your boy C-Zar, and we are talking about MicroStrategy today. Hit that like button, subscribe if you want to see more content like this, and let's get into it without wasting any time at all. Here we are sitting at about 340 bucks, closing the week 3% to the upside or thereabouts. It does seem to me as though that was the low, and right as we get further away from it, it's more obvious, obviously. Next week, if we move down next week, if we come down here, then maybe it's less obvious that this is the low, right? $340 now on the RSI, looking like we found a low here at an area that we found a low before, so a little bit higher nonetheless, right? This low here is a little bit higher than any of these lows, but to be fair, we're also coming from areas that are a little bit higher than any of these lows were associated with, right? So fair's fair in that kind of context, right? If we're looking at this thing on a price perspective, actually, first off, you were just below the 50, but with hopes to get above the 50. I think it'd be nice to get above the 60. It's always nice to get above the 60, but something that would definitively break this downtrend would definitely be encouraged. Above the 50 is nice, but getting toward that 60 and above it would be nice. So sometime over the next week, maybe sometime over the next couple of weeks. But if we look at this here on a high to low basis, you have gotten above your 236 on this fib, this relative fib, from the high at 543 to the low at 285. You're at 340 now, breaking above your 236. Very likely you will see the 382, if not higher, before seeing any kind of corrective move, would be my guess, right? I don't assume, and I do assume that you will move up to here and beyond in time, but it's not going to be in a straight line, right? You're going to dance with these fibs a little bit. And right now you're at 340. You're probably going to move up to 370, somewhere around there. Maybe you move back down to 340. Maybe then you move up to these highs around your golden ratio, around the areas that you found resistance at plenty of times there. And then maybe you find resistance there, consolidate, continue to move up, stair step, and then you're up there. If you were to do this kind of maneuver, then potentially it'd be by the end of January that you're at new all-time highs, beginning of February that you're reaching out to these zones here, something like that, right? I definitely would suspect, because you kind of moved aggressively down here, that whenever you move up to this golden ratio, you probably move aggressively up. And if you look at it, actually, drawing it the way, I didn't mean to do this, but if you do move up to the 382, even a little bit above it, which is pretty common, and you pull back to your 236, that's a very common thing to do as well. Okay, and then you go all the way up to your 618. If you look, that's kind of a little inverse head and shoulders. You got the left shoulder, you'd have the right shoulder, right? If I delete the fibs, you have the left and right shoulder, and that 618 move is even kind of a doable measure move. And it's not appropriate to do this at all, but just assume. I mean, it's pretty damn close. I don't know. That would make sense. Watch you go right to about like 365, 370, probably closer to 365. You're at 340 now. You probably find resistance there. Maybe beginning of next week you move up, and then you move down to around the prices that you're at now, probably even a little bit below 340, probably closer to 330 would be my guess. So in case that wasn't clear, 365-ish down to 330-ish, and then from there up to 424, 444. That'll all probably happen over the next 2 weeks. Right, and I actually suspect next week will be this exact move where you just move up and then you move down, and then the following week is probably going to be this succession up to the 61869, and then from there, who knows what happens? We'll see from there. But that's kind of I have a very strong suspicion about this. It looks very right in the price. I feel like we will get that kind of inverse head and shoulders look, but time will tell, right? That's very speculative. Watch it not happen like that at all, man. And we just move straight through the roof, or we die, or we move sideways. Watch none of that happen at all. You never know, but I'm calling for that right now, just based off what I'm seeing in the fibs and what's a pretty common maneuver to make. And then on top of that, not only is it's a really common maneuver to make, what I'm talking about here, right? Going up from your low. I talk about it all the time. If you watch my channel for the past 2.5 years now, or almost 2.5 years, going up to the 382, 236 to the 618, it's a very common thing to do. But then I look at this, right, and you basically did that here. You went from your 382 down to your 236, back up to your 382 and down. It looks like it's an inverse head and shoulders pattern. It's perfect. And that measure move lines up pretty well with the 61869, which is also at previous areas of resistance. Like, it all culminates together. I'm not just making this up. I'm not like, oh, this could be a really big head and shoulders pattern. Maybe one day we'll drop all the way down here. I'm not doing that. Like, I've got other things that are backing it up too, right? And it all started with this RSI. It all started with the idea that we could break out of this to the upside, right? and then looking at the fibs from there. But anyways, let's move on. Okay, looking at the weekly here. Weekly RSI also looking very bullish. I love this look, man. That's amazing. I think I talked about this last week. We wanted this week to close green because if it did, we got a close. We have this thing bouncing off the 60, which is a very powerful maneuver. I actually want to see if we've got any examples of that going back in time. Let's just put a line there. Line there. Well, rejecting the 60, was that a powerful signal to the downside? Kind of. Not really. I wouldn't call that powerful. It wasn't weak, but you know, a little bit of a move down. Rejecting it here on the 60, you know, not really. There you go. There's a bounce. Okay, bounced right there. You know, whenever you did bounce, it was this week here, and you had a 12% move. It's not super powerful, to be fair, but not shortly after, you did move up a pretty good degree, right? It wasn't the immediate, like that immediate week, but let's see, 1, 2, 3, 4, 5 weeks later, maybe even the 4th week later, within a month's time, that's when you began this really immaculate move. That's what this bounce off the 60 set you up for, right? Because whenever you're in the overbought zone on the weekly, on any time frame, when you're in the overbought zone and you bounce off of the 60 or the 50, the more that you stay up in these areas, really the more that you stay above the 60, the better. But overall, staying above the 50 is good too. But you bounce off these key areas and you get into the overbought zone time and time again. It's not these like far and few in between. Let me see if I can find an example. It's not like this where it's far and few in between, right? It's more consistent on a regular basis. Whenever you get stuff like this going on, you get some very powerful moves, okay? And what you're doing right now is somewhat suggestive of that in itself, right? You were living in the overbought zone. You were doing some of this stuff here before, right? But now you're bouncing off the 60. You're about to get in the overbought zone again after just being in it not too long ago. I suspect this move could be bigger than the move that brought you into this move, right? It really could be bigger. And if you're at 339 now, calling for something at 1,000 or more, what would that, I mean, let's just see if this is your move. Hold on. And I'm just saying things. None of this is planned, right? I'm literally just going with the flow, telling you guys what's off the top of my head based off the information we're running with, right? So it's just agreeing with things that we've said before, and I'm glad that it is, because that way we know that the analysis is actually accurate, right? If we are to get into the overbought zone, I would expect off of a move like this a rather powerful move. We had a rather powerful move coming into this, so I would expect something either of this magnitude or stronger. And if it was of this magnitude, that'd put you at about $1,300, which we do have price targets for, right? It's a little bit higher than I was expecting personally. Maybe you tear through 1,000. I don't know. That's your 1,886,200 range right there. It's perfect. It's literally right there. Maybe you go higher than that. Maybe this move is overall stronger than the move that brought you in, and you go up to your 2,272. But I don't see MicroStrategy being worth 2,400 by the end of this move. That's more like cycle ending stuff. So maybe we're getting a little bit out of touch with reality on that. But certainly, I think that this is, you know, again, rather suggestive. And if you see a lower high here in the RSI, which you might, then that might be suggestive of a smaller move rather than a comparable move that brought you into this, right? But still a strong move. Getting into the overbought zone likely does provide a strong move. So something here, man. If it's smaller than this move, okay, but still something around $1,000 is coming. And based off of the same time frame, from a low to a high, I mean, that would put us in the beginning of March with this move, with the idea of this move. And I do think that it's going to be a strong move and a stronger move. With the idea of it being a stronger move, it likely doesn't just move bigger, it moves faster. Does that make sense? I suppose if you move bigger, you're going to move faster, right? Which could imply then that instead of the end of March that we're here, it could be sometime earlier, maybe the end of February, maybe the beginning of February, end of January, something like that. But I do suspect that over the next month and a half, probably over the next 6 weeks or so, we will see prices up at $900. I know I had a couple people, I'll end the video with this, but I had a couple people, more than a couple, who were commenting on the fact that, you know, I changed my target from 1,000 back in December to being 1,000 at the end of January. Now I'm saying it's going to be probably more likely at the end of February. Talking about prices at around 540 to 550 by the end of January rather than 1,000 by the end of January. The reality of the matter is, guys, whenever I made that first call to call for $1,000 by the end of January, that was here. That was like right here, right? December did not perform at all how I expected it to. Didn't perform at all how probably any of us expected it to, right? The majority of the market expected it to. So calling for $1,000 by the end of January here, when it was December 11th, December 12th, before Christmas, and we were all the way up at $413. I think that was much more appropriate than it would be to call it down here January 3rd, going into the end of the weekend. It'll be January 6th whenever we start the new week, and then we're still down here below $400. I don't think it's as appropriate to call for $1,000 by the end of January. New all-time highs, sure. New all-time highs, sure. I could see that happening. Something around the all-time highs, maybe just below, but around there, above $500 by the end of January, I can see that happening. If it were at new all-time highs, the highest I'd give it is probably like $700 or lower, between 700 and 500 by the end of January would be my expectation. But the reality of the matter is, I didn't get hung up on it. Right, I got hung up on it for a little bit. Even down here, I was saying, no, targets are still good. We'll make, I was thinking that we'd move up and it would be fast. I was expecting a fast move, but it just didn't happen. We kept moving down. And, reality hit me at the very end. And here we still were expecting a bounce, right in this gap that we filled, obviously. But here at the end, that's whenever it hit me in the face that it's January now. We're a lot lower than we were over here whenever we made that call. So things got to change. If you can't go with the flow, you're going to get left behind or get run over, right? Worse. So you got to be malleable. You got to be able to shift and change and have the ability to move your decisions or play with them a little bit, right? They're not fixated. They're not set in stone. I don't know, man. I'm rambling at this point. So I'm going to end the video because I don't really even care to explain it that much. But essentially, yes, the targets are different. They're not at 1,000 by the end of January anymore. It's more likely going to be somewhere between about 500 to 700, closer to that 550 area by the end of January is my expectations. And then we'll see those $1,000 targets, which I do think are inevitable, if not by the end of January or by the end of February, then sometime in early March. But I would think by the end of February is when those targets come in, right? If we were talking about those at the end of January here, well, if we're getting pushed back a whole month, wouldn't it make sense that we push our targets back a whole month? I think it would. So anyways, guys, hit the like button, subscribe if you want to see more content like this. I know I kind of rambled at the end there, but it's how I am sometimes. It's the end of the night for me. I got excuses is what I got. All right, take care. See